There we go. I have to double check to make sure I was live there. Okay, just making sure. There we are. Jean-Paul, good morning. You got my sound now? My back on? Can you guys hear me now? You should be able to hear me now. Okay, so see how we traded through this level? We're back into it. Looking up inside this range here now. Wait for this market structure to shift to the upside. If it trades back through this again on the downside, you're inside this little consolidation here. Wait for a structure break. You're good now? Could get. No structure break here yet. You ran through this level. Now you want to see if this will actually hold price and keep going higher. If it breaks back through it, don't get bashed around inside the consolidation. Just wait for a structure shift above or below. Let's mark off our 830 here. It's going back to find support. So we haven't tagged this level here yet. You didn't get an opportunity to get in on this. This one here, you finally traded below here, but you didn't get an opportunity to tag that either. We ran all the way down through this level, extended the range, got down to the discount box, did not extend the range any further. We just kind of swept this low back to this next discount box down here. And then we got to change in direction. We run above this high, this premium inside this smaller range. We don't have a discount really in here, so we just traded back into this for a run back up into an area that hasn't been tagged yet. So kind of look for your internal range liquidity hunt here. And if it gets back above this, then look for another all-time high extension. Morning, Hadi. Morning, Russell. Rez. Morning, Craig. Hourly has given us a change in direction. We've come back down and tagged it right here to see what that low is right here. 138, low is 139.5. We've run the highs out, so if we come back into this in the next hour, if we come back through the mean threshold of that candle, look for a deeper run back into this hourly discount. I'd want to see no more than 118. I'm going to put that in here. This is my upside, 197. So there's the first one that we didn't get a chance to tag here. Let's see if we get a revisit of this, or if this is just a run back into internal range liquidity. There's 62%. So if you got in here under 50, hit 50, pay yourself. Hit 62, pay yourself. Comes back to 50, you're out. Quick little internal range liquidity hunt. If you're looking for the 70, 72, 75%, there's your premium box. We're just hitting that now. There's 70% right there. If you're just doing take profit model 2, which is box to box trading, that's there. Look for right there would be an ideal place to reverse, right at 70, right consequent encroachment. We'll see how that holds. We get back through that on a full close. Look for this continue going higher. Now, if you want this to continue going lower, watch for a trade back through this level, and then close through here. Use this as support and start running these lows out. I'd have to wait for a shift here. So when you're trading this internal range here and you just nibble out a little piece of profit here into the premium range, wait for it to close above that for your range extension. There's the consequent encroachment. I want to see this candle provide support here now. Oh, we traded above it right here. That's good. There's the fill of the box. So you give a scale out 1, 2, 3. Now you just wait here. think that is a slight close above. Let's see if it just taps here and starts pushing higher now. Look for rejection block, half the wick, hold high. Good morning, Derek. How you doing? Hope you had a good weekend. How's the bees? How's the wife? Not necessarily in that order, of course. Trade through here. Wait. Wait for a close. She stung me with the bees are good. They can have a nasty sting to them, those wives. No body below here yet. All we did was retrace back into this city. See this keep climbing higher. All this retracement back into this premium. What you want to see for it to continue going higher, that's fine. No bodies below here yet. If you get a body below there, then forget the continuation for now. But otherwise, we're still looking for a continuation. There's a slight close above, nothing below. So looking for, again, the premium or the rejection block. And you want to see this body starting to get up in here now. Watching how this is kind of waffling back and forth. Not what you want to see. Bought some Manuka honey this weekend. Yes. Quote from an unknown source. Do you think that hurt? Wait till you get the next one. Just going to clip that rejection block. Just looking for the top right here. The open is 171. Like half a handle away from the rejection block. So we've had another nice little pop above here. I'll run back into it. Give it a little tap. And they keep pushing higher. There you go. There's your rejection block. Now you're looking for 50% of the wick. That's done. Now you're looking for the old high and look for continuation on the upside. is 24,190.5. I got a 24,198, Derek. That gives me two standard deviations. I think you and I are on two separate levels. We're picking it from a different place on the two standard deviations. That's my two standards right there. There you go. Now you have range extension. Treat this no different than any other fractal time frame. Now I'd like to see on the hourly for us to come back and tag these old highs here or create a SIBI, a BISI here. If we create in this last or next hour, maybe it's just going to run all the way up. But if we have a run back down and create this, now that we've got a run above old highs, and we have a fair value gap where I want to see form, I want to see in the next hour or two a run back down. See if we violate. This would be the graded response we talk about here on the hourly for a continuation to the upside. And if it reverses on us, comes back and fills this whole thing in, look for this level or below. I want a fair value gap that's stronger for me if we have this fair value gap form above these old highs. And then use the old highs as a consequent encroachment of this. Like that, you want that to stay where it is, right? Because if I just go like this, right there, let's say that stays the low, and that is the new fair value gap. Equilibrium puts us right here. Look where it sits. It puts us right on the high here. So the next hourly candle retraces back into these equal highs, which is also the consequent encroachment of this BISI. Not that it's a BISI yet, but if it ends up being a BISI and that ends up being the low there, then that's the level we'll be looking for. Or if you put it into quarters, then 75% would be down here. So you have your A, B, C, D's fulfill. Tag this old breaker right here, and then look for a run higher. And if it eats through the mean threshold of that candle, I'm looking for a retracement back into that hourly level that we never really got an entry. We're like 1/2 of a handle from tagging that entry for a long. That's how I'm looking at it anyway. You're on December already there, Russell? Change in direction. Mean threshold is 177. Morning, Charlie. Good. Got this rejection block again. What's that? Oh. Let's see if we trade back through here. Now, if we trade back into this and continue going lower, yeah, we traded through it. We're just looking for it to come back and tap it and keep coming lower. We traded through it. We come all the way back into the mean threshold of this candle. We're looking for this to run higher now. So you're looking for this mean threshold to give way and a continuation on the upside. This internal range of liquidity, if you go from here to here, you'll find that that's probably 50%. I haven't checked it yet, but it's probably where you've had a run to. Yeah, 50% right there. Turn. You want to see if you're going to use this to leverage it going higher now. And if it's bouncing around here, again, there's only one level there, so don't mess with it, leave it. You've got a premium, you've got a BISI here and a CIVI here. And they're overlapping right at the same spot, so wait for a structure shift. Or wait for 9:30 at least. Macro's better. Just wait for a macro. I'm totally fine. Any of you guys do your homework this weekend and look at what Ollie was talking about in terms of news releases and stuff. I'm going to support a macro. When the news events come out, what's the best time to trade? Based on his notes. Have a good look at those notes there. I've created a Google Doc. I took what he wrote down there, and I want to add to it now. So I want to just be observant of news releases and then kind of go back and have a look at what happened during that news release and reinforce the message he sent you on his news reading. And then if you have any questions for him, just ask him. I'm sure he'll be more than happy to answer them for you. Monday is rollover. Well, let's do a Monday rollover then. Let's do NQ. When did that happen? Can you guys hear me now? Anyone having issues with sound again? No volume here. Steve talking. Let's see, it's not. I don't know why it just keeps turning off my volume. I'll just check there every once in a while. I was consolidating. Continuation on I'm hunting internal range here now. So watch this mean threshold give way and watch this over here. Good, now I'm going to charge right through here. Give me a close below this level, find support, and you're coming back into this internal range here. Look for this guy here. Whenever I'm going to go, I'm going to be careful if I hit I put a hotkey on my computer here. So if I accidentally hit that key, it cuts out my sound. No trade below here yet. Trade back into consolidation. That's a short right there. Cam model 2. About right there. I haven't marked it out, but let's see if that's Cam 2 is right here, 174. I want to see that hold right there. Start coming lower. 174 is the Cam 2. We have all this regular trading hour gap below us here. See that? Remember that hourly? We wanted to see stay open. If it doesn't, if it just comes back and retaps this without staying, we're kind of looking for that to be the 50% of the range, but it's looking like it's just coming down to give it a tap. So if we get, this is what I'm looking at now. So if this stops here and you don't quite get the highs just yet, and then the next candle comes down, gives you institutional order flow entry drill off the top of these and goes higher. If we tap them and start eating through this candle and filling it on an hourly, look for this 15-minute here to break to the downside, come back inside it, and look for this regular trading hour gap to fill. Tickets 25.50, you know, the usual. As soon as you see all this going back and forth, you're inside this box. This is high resistance stuff. Do you want to be playing in this? You got 10 minutes before the open, so you're still bullish. All the time we're in here, we're still bullish. And for this internal range stuff, you'd have to get through here on a close. So we'll look at some of these other ones here. Sounding super clean. Yeah. I'm not looking for, look for 45,934 and see how it acts in there, right there. So if you get a reaction off of that, go higher. The pound, we've got the pound upside. It's still this level here, 136.73. That's a daily chart. I've got as an upside objective. We had that last week. A 15-minute chart. All the time you stay above here, you're bullish in pound. If you get below here, then look at this level for support to go lower. Otherwise, just an internal range liquidity from here to here. I don't see anything off here except right there. Look for a run into this level. Look for 50%, 62%. Old highs. Chipping away at that bull. Euro. We traded below it. We came back into it, looking for this 1757. Retest. We traded below it. Retested the consequent encroachment or the mean threshold of that. Went lower. Still bearish until we start getting back above these two highs here. But we'd still be bearish on that. Bearish in Bitcoin. Hourly. You could get a retest all the way up to 309. $115, 309, 327. And then roll over, keep coming lower. If you start eating through that level, you've got all of this immediate rebalance and a refill of this fair value gap. You start getting through that, then obviously the premium then I'm on the wrong side of that. So just watch how this acts. This would be nice if it just came back into the mean threshold of this candle, rolled over and started coming lower. So look for the change in direction to the upside to prove you're wrong if this is going to fail, and it sits right here. We're taking the low, change of direction, right there. We have a body close above here, look for a run inside this range to here, and if we take out that candle on the upside, then forget that, we're heading back up higher. So not going lower just yet. We're bullish right now, giving us a bullish indicator here, and look for 115. I'll put it in here. That is the upside. If you get above that, find support at that. Look for this breaker to give way. Equal highs and then march higher. This is a good example of consolidation. And you have this nice little displacement here. And do we get to retap those old highs? Come back, retap right here. Then go higher for coffee. Don't see anything here yet. Got 3 more minutes. I like Disney bullish from here. To at least 116.75, 116.78, somewhere around there. Body breaks above the high here. Come back, retest it. Keep pushing higher. Same thing we're looking for on NQ. If you get an all-time high and you come back and retap it, keep pushing higher. There's no reason to believe that that's not going to keep going higher for you until you see a nice reversal. Higher time frame, hourly. You want to see it get through this. Is it a Mark III? No. That's the target next. It's not like sitting in my office. This chair's kind of wrecking my back here. I hear silverware clanking off dishes. That was Carla's dad. Just chipping away at his bowl there. He sure likes to dig into that thing. Washes dishes in the kitchen during his off-hour time. Victoria, anything for a few bucks. Gotta pay for our trading, man. Gotta pay for somehow do some dishes. we'll trade for food. You're funny, Derek. You're very funny. Yeah, he shuffles around here, so it's going to be quite loud. Here he's back again. You can hear him shuffling away here. That was my downside objective this morning. And we've hit that. Now I'm looking for this little box right here. Right. Let's go. All right. There. So you're looking for this little box right here. It's in there already, just as I'm drawing it now. Okay, sounds good. He just sold his house, so we got lots of moving around and stuff to do. There, discount box is hit now. And I want to see if we get through this and look for a further downside alley. If you're looking for trading this, I'm looking for the next one. It's 668 to 678. That'd be the next downside objective. So you're looking for 678 to 680 or 638 here. That's the next downside objective. Little box. That's what I'll be looking for there, Ollie. That price held. Found support. Still pushing higher. Did we hit it? We hit it here. The busy held price. That busy held price for sure. Looking for continuation, looking for that upside objective. Where's my upside objective? 190s. Oh, that was it, wasn't it? 190 something? 197. 198, somewhere around here. That's where, that was my, why is it not on there? So now if I go back down to here, I'm just gonna make this a bigger one here. Is this the one I was hunting for? 203, 204. That was 2 standard deviations from this. Breaking structure. Didn't take the high. Ran the high. So looking for 2. There's 2. On a 1 hour chart, 2.5 puts us up here now. Oh, that's upside. Wait for the macro here at 950. You're welcome, Ollie. See how we use this premium box up here? We have a change in direction right here. Body trades above it. Come back into it. Run for the premium. Wait for a body to trade through the premium right here. And as soon as you come back and tap it anywhere inside that, that's your continuation to the upside. Comes back all the way back inside it, taps it one more time, and then finally goes higher. I do like this here now. I'll put a little box right in here. Wow, that's a big dive down in Tau. How's our German DAX? Did that come down here yet? That's right down into our box. Full fill of the box, and we have a little wick getting through there now. So you got this first presentation. So if we get our retracement back into this low at 733 to 747, or I want to see this pop below here on a close in the hourly. So you got another 20 minutes or so. Pop below this, come back and use this as support to extend this range here and start reaching into this discount box down here, the next one. So far, there's nothing on the 5-minute to show you that you're turning around. Gold is arranging. Dow does what it wants. It certainly does. ICT calls it the canary in the coal mine in a couple of videos. That bird is dying, man. It just flew into a wall and fallen down a mine shaft. So what's it retracing back into? I'm going to look for 45,772. I'm going to put these down here so you guys can see them. 45,772. And then I'm looking for 45,707. And then I'm looking for 45,650. See how they act inside each one of those. See how they act. And if they rip through all that, then I'm looking down here. I'll put a little box here. Times they are a-changing. So then just kind of, that's the daily. Mind you, that's a daily candle, so it could get ugly. You could do it for some big diving. Yes. No test of that yet. I like that. Thank you. We got a little turn yet. Yeah, right here. Okay, so I don't expect to see. I'll wait for a market structure shift here. We got this macro about to begin. It has ceased to be. It has fallen off its perch and gone to meet its maker. It is an ex-parrot. The only reason it had been sitting on the perch in the first place is because you had nailed it there. Yes, the old dead parrot sketch. It's expired, gone to meet its maker. Hello, Polly. Smack, smack. Mean threshold. Look at that, right inside the box. How perfect is that? The box I drew out there is just a perfecto. I'll come back and give this a little kiss. Y'all can continue going higher. Hey Theta, where are you right now? No, yeah, I'm in Manitoba at my wife's dad's place. He's in one of those life leases with all these other elderly people, but he loves it here. It's great. So I'm just sitting on one of his chairs here. He just sold his place, so we're back here kind of helping him out, getting some moving stuff. That's the typical things you get when you move. See how we broke to the mean threshold now? I'd like to see that keep going higher here. We still haven't tapped this first presentation yet. So yeah, we've got to start moving a bunch of stuff now. Luckily, we moved a bunch of stuff here into this place and got rid of stuff, and there's still the possession date's like the 24th. It's really quick possession date, so we're trying to clear out the last of the stuff, and then heading back to Manitoba or back to Alberta. Is that the tap of the 15 of the first presentation? I don't have a trade here yet. I'm just kind of waiting to see. It is still acting off of key levels that we're putting in, which is great, but still no clean trade for me to get into. If you're all just taking these levels anyway, then make sure your stop loss is tight. Looking for the next upside objective is 281-ish, 284. So we're inside this little range here. You've gone through the mean threshold, so that tells me it's a little more bullish. I'd like to see this discount array here get held and keep pushing higher. Looking for the rejection block. There's the rejection block. Looking for higher prices now. And away we go. Pay yourself there if you haven't already done so. Oh, my wife is all over me for that. I'm not moving anything heavy, that's for sure. I don't, because I'd have to endure another 15 hour car ride back to Alberta. Yeah, I'm not flying back, so we're driving back. So I don't want to screw my back up before I hop in a car for 15 hours. Okay. So now we've got a body above this. Give it a little tap right there. Keep going right there. That's exactly what we talk about every day, you guys. No different. We have a range extension. This is an all-time high, right? And we're still going higher. All the time you get your If you're worried about where price is going because it's reached an all-time high, treat it no differently than any other range extension. It's a fractal thing. Don't let all that other noise about it's a new high, it's scary, it's just another range extension, man. All the time it's meeting the requirements for range extension, and you haven't got a reversal yet. Treat it like any other 1 minute, 5 minute, hourly, daily, doesn't matter. Just treat it like the same thing. If you start giving it new rules because it's doing something new, like a new range high, then you're going to add more stress to your life. He's back. So we're looking for a range extension for our standard deviations of 2 and 2.5, correct? And depending on which one you pull it from, which one you pull your range extension from. So even if we pull from here, let's do this one. Let's go here. There's one standard deviation right there at 242. Two standard deviations would be 324 if we use this most recent one here. So when you're looking at this range extension now, what's the rule? Do you guys remember the rule? And again, this is just my rule. I don't know if it's your rule or not. If you use a take profit model 2, it's also the rule for a change in direction and a seek for internal range liquidity. Okay, so take profit model 2 is box to box. When a new box is formed, or sorry, take profit model 3. So in other words, you get in this one for a long right here, and we start running higher. We stay in this trade on a take profit model 3 until we see it, the BISI forming on the other side, and it's taken and there's a close below that. And then you can do several different ways you can exit the trade. You can either exit right away as soon as you see that close happen below there, or you can see the retracement back into the BISI for continuation on the downside, and then say, I'm out now. Then if it closes above it again, you can get back in for continuation on the upside, or you wait for it to start running into this discount array. So if we trade below it, trade back into it, look for a run back into the discount box, which is down in here. Then you know and then if it breaks market structure to the downside, then you know you're probably in you've probably reached your high of the day for the short term. Because unless it trades back through there again, and you got to keep an eye on the switch ups and stuff. But that's how I would look at it. So take profit model 3 is also the rule you'll use to get out of this long trade after you've taken out a new high and you're going to continue going higher. See, right now we still have not had a body trade through this. So you have a continuation. We've had a retest of the old high, continuation. So if this gets traded through on the downside, you close that trade out. And you look for this internal range liquidity. I'd love to see 490 for the week. Or at least the rest of the day. 490 for the rest of the day, and then just keep on humming. September is supposed to make a new high, and then we have a dip down into October. So watch this right now. All the retail people are saying, look, a little bull flag is forming. Keep your eye on this level right here. So this fair value gap, it's been reclaimed. And now you want to see it just go higher. Rejection block, hold high, pay yourself. Move to break even. We're looking for continuation on gold to all-time high, or at least 50% of the wick. So in a minute, you want to see this create a little fair value. You want to see this pop up above here, not just a wick. Stay above here on a close, and then use this candle as support. And you want to see that stay open. The problem is you can run back into this, or even all the way back. Well, this one's already tagged already. Yeah, you want to see this fair value gap form in here and stay open. Start pushing for the rejection block. Ideally, you want to see it close above 3695. So just our next upside objective is here. See how these levels have been finding support? These are the ledges that you climb on to find support to go higher. Delicious, man, delicious. And that's so far that's from this range extension. Find support 165. We're at 265 now, so there's 100 handles. And this is at 284. If you like this level of detail, this is something that you could see yourself getting into. Hit the like and subscribe. We're always here for you. We're here to help you get your level of detail. Staying on the horse. That's how we like to look at it here. It's just how to stay on the horse. Sometimes you get thrown off. How to get back in the sync with the market right away and reduce that level of stress that you get when you're on the wrong side of the market. How to recognize it quick enough so that you're not taking big hits. You're always going to take a hit somewhere along the line, so you got to be prepared for that and know where the market's changing, so that you can say, I'm on the wrong side of this now. I can get out of my trade, wait for a clean setup to occur, and then you can get back into the market again. But right there, you're just inside this run here. So you want to say, if I see this close above that level, I'm back into running higher. Now that we've traded below this level, I'm looking for this to go deeper into this range here. So I'm looking for 248. And then I'm looking for 246 and 243. So you can recognize when the market is changing direction inside of a small little range. And then you can tell if it's going to go to a larger range if that range extends through here. So we're looking for key levels like fair value gaps and balances. And if you don't have those, you look for order blocks, their mean thresholds, highs, and opens in this particular case. So the high we're looking for right there is 248. And again, we saw the change right here. We said that's our first target right there. Internal range liquidity hunt. 50%, 62% of using the take profit model 1. So there's the first one at 249. Next one we'll be looking for is 246. Morning, Hans. So this is just small little internal range stuff, right? So you want to see a shift. You want to see it break through here and here, come back, use this and this as support to go deeper into this range and hunt back for that first presentation fair value gap again. If it trades back through that level on the close, then you're looking for continuation on the upside. How you doing today, Hans? Did you have a good weekend? Not sure my sound is still on yet. Morning, honey. He went to the lawyer already. I love you too. He's already been out and back already. There's the next level right there, 246. The next level I'm looking for is 243. Now remember, any one of these levels, it can bounce off of that now and start going back through this level. So for me, more support would be this candle getting validated, which it just did. Now you want to see this provide support and keep coming and drilling into this little breaker here. If that breaker holds, which you're expecting it to because it's a stronger candle, you expect to see that push back through here and continue going higher. So what you want to see now is this candle gets supported. We've traded above, so now it's validated. Now I want to see it find support here and use this candle to get up on top of this level right here. And I can come all the way into the mean threshold of it. It closes through it, then I'm expecting to see it run back into this mean threshold again. Times they are changing. Okay, good. Now you want to see it. That close there in the next 14 seconds above that level. There's your rejection block. We're on TIBS 07. So this could just roll over here now, keep coming lower. Look at that, just closed right on it. If 7 is that, if this gets through here, then we're looking for 910 to keep pushing higher. Candles supported. We came back, found support at it, levered right up into this candle, and we literally closed on it. So we haven't really closed through it yet. You just opened and closed right on it. And that debate, nobody's really taking me up on the debate as a level of, I'd still take it anyway for continuation versus now I want to see a body fully close above that before I commit to it. D wants to go in lower. Let's have a looky look. Not yet, my friend, not yet. I see what you're looking at here, though. If this candle gets validated, then it becomes the new support level for run higher. Otherwise, you may get your retracement into here. Get a body above that. Now you're trading through it. So mean threshold gives way. Look for a run lower and look for this mean threshold here. You might get it now, Eddie, if we get below this candle here. Look for that mean threshold and then a run back into this level right here, which is a 5-minute. No, there's no short here yet. So we're above it, below it, we've already hit the rejection block. Find support, we're through the mean threshold of this candle now, so I'm expecting to see this come lower. Thanks, Darren. Hope everyone is well. We're on holiday in Gran Canaria. The weather is fantastic. Well, awesome. Good for you, Hans. Good for you. I'm glad to hear you're enjoying your life. I'm glad to hear you're chilling, relaxing in the sunshine. Enjoy it while you can. It's a beautiful thing, man. It's a beautiful world out there. Enjoy it. See it while you can. Treat it with kindness. Looking for that mean threshold now, 243. We're just staying on the horse, right? That's all we're doing right now. Just if it switches up on us, you got to be prepared to say, all right, that's the level I want to see, hold price. And look at that. It's holding price. Takes the low, mean threshold, dusted. And that's just staying on there, looking at specific data points that you want to see price held at. If it switches up on you, then where's your backup plan? Not that you're actually trading this, but If this was a higher time frame premise and you could catch that and you say, oh, it's traded through that. If we can get back to this, I'm looking for these lows here on the daily. I'm just looking in here for a 1 minute chart, 1 hour chart, 15-minute chart to catch a reversal in here to aim for that low. So what you're seeing on a 1 minute chart is just merely a small fractal of what happens on all time frames. And when you use these lower time frames as means to enter on what you see on a higher time frame, and if you're on the wrong side of a higher time frame, you can get back in sync with the market again. So now what we're looking for is a run below this low to the rejection block at 239, or sorry, 238, and then see if we can get into, I guess it would be 239, then 238, and then see if we can get back into this Bessie Fair Valley gap here, 234-ish. The Canary Islands. And just because we're aiming for this area, if we don't get it, you can't say, oh, it failed. Well, if you're staying on the horse, you'll see why it failed, and you can say, well, that's not my objective anymore. I'm out of the trade now. If we were long and we're looking for a BISI to get closed below, to close our trade, it's right there. It closed below it. You come back into it. You're out of your trade now, and now you wait for a clean setup. Break above an old high, come back, find support, or market structure shift, then get back in sync with it to go lower. So that long that you had from way back when, whether you took that down here, you're looking for the first BISI. So this is a take profit model 3. Doesn't change. We have nothing in here, nothing here, nothing here. And then right there, change. I'm out. Now you wait. If it gets back above it, get back in sync and continue going higher. Rejection blocks hit. Rejection blocks hit. That was our next objective at 237, 230, 238, 239, we said. We're bouncing off this fair value gap again, and now we're using this level as support to come lower. If I start digging through this, I'm looking for these 3 candles to get taken to the upside. Otherwise, that one, I want to see some support there and keep going lower. This candle's now been validated from above. You want to see it give way, just start driving right through it and using this candle as a propulsion. If we get on top of it and stop right there and start moving higher, then you're back inside this range, and I'm looking for right there at 256. You got 2 different overlapping ideas here. One is you can see this go higher. Well, you have to break market structure here to continue pushing higher, or you're just coming back into this little mitigation block or breaker, depends on which one of these little swing points you want to, I guess it would be, it's just like a mitigation block here to go lower. So you don't want to see this one get re-drilled into again and again and again. Otherwise, the mean threshold is the only thing left to hold price from going through here. And that one you want to see. These 2 right now are in a fight, in a battle. This one here wants to hold price to send it higher. This one wants to hold price to send it lower. So just watch them battle back and forth until you see one give away. You say, okay, so that's a sign of weakness. That's a sign of strength right there. It's like a video game. You kind of watch it in back and forth, these two candles battling it out. And why their levels are important. When one starts to, this one's been drilled through multiple times now, so it's getting weaker. So we want to see if that pops through there on a close in the next 21 seconds, and then start drilling into this fair value gap. And if we can get below that, then this whole level here now becomes support to keep coming lower for this fair value gap below us. See how that level gave way now? And it's mean threshold gets tapped. Now I want to see that come lower. I've had a lot of coffee this morning. I'll be right back. All right, we're back. Let's make sure we're back. Yep, we're back. All right, so we've seen that we've traded through this level. We found support at this level. We've traded back into that level. And we're looking for this level to give way. It has. come back and give it a little tap, and we're looking for this fair value gap down here, just as we described before I left. So this is just simply how to stay on the horse, how to recognize when the market's turning on you. And this is no different than a daily chart, monthly chart, a nifty chart, a German chart, oil. It doesn't matter, man. It's all the same thing. If you don't buy into that, you're going to have trouble here. You're going to have a tough time trying to buy into what we're trying to sell you here. And I'm not selling you anything other than we're just trying to stay on the horse. Just trying to read price action to the point where you can see it turn and then decide whether or not your model fits with what you're seeing in the market. If it doesn't, don't trade. Just wait. Just wait for your setup. That's all you got to do. If it's clean and you see your setup and you've been practicing this riding the horse here, staying on the horse, and you see it turning and your setup aligns with that set change in direction, then you have a little more confidence to take your trade. And then if it starts to switch up on you, you can see my trade's not going to pan out. It's turning here again. That's why I give you that fail safe as an idea. Where does the fail safe occur for you? Where does the market, you say, if it breaks at this point here, like a certain point, then I know I'm on the wrong side of this again. Market structure is going to change to the opposite direction. My trade won't pan out, and then close your trade. And then if it switches back up on you again, it continues going in the direction you're going. Don't get mad about it. Just so, okay, markets are too hostile. They're jumping around too much. There's too much bouncing around, so I'm not going to bother taking this trade. I'll wait for the markets to settle down a little bit. And you got to be okay with that. It's like running a business, right? Sometimes you're not going to have nice, happy customers. You got to be prepared to appease the masses and just wait for your ideal entry. So now we've got that 5-minute reversal. So you've seen it on a 1 minute. I showed you the 1 minute. Now you're seeing it on a 5 minute. So we want to see this close below here. See that wick? The wick's the first indication that, hey, look, that's the direction I want to go. We're aiming for that first presentation fair value gap again. And we've called this right from here. Right from here. We wanted to go higher, and then we're on the wrong side of it. So you get back in sync with it, and any loss you would have taken on this, wanting it to go higher, again, if you paid yourself a rejection block, you didn't take a loss. And then you get back in sync with it, and all that, any loss you would have taken there, had you not taken that, you would have recouped it and you'd be back in profit again.
Middle. Sorry.
So many pictures now. So this BISI here has now been traded into. We have not had a body break below it yet. So there's your next one down here. The other one's good encroachment is holding price. Got a few wicks there. So you want to see if we can get through this candle's high on a close and then look for a little structure shift right here at 249. And then you're back into this guy right here again. So we're not in here right now. The horse is changing direction. Look for this support here. and then look for the premium level up here. And if we get back through that premium level, look for a continuation to the upside. So D's taking this change, reverse back into here to go along. Look for a continuation above this level here to support that idea. Partial at the mean threshold, or partial inside small range premium box. I'm just going to turn my sound up so you guys not to hear this shuffling on. So the 5 minute find support. Find support of a 1 minute. You're back through this level. You came back, found support at that level. You want to see this. I don't know why that disappeared. You want to see this level give away now for continuation. For this to continue looking higher. So you look for rejection block and then a new high. $15-minute came back, filled that fair value gap completely. So that's like a D level trade that's supported by a 5 minute. And that, look at that, right back into that 1 minute again. We have not got higher, so there's no support to go higher yet until you break that level. We've come back and retap this one more time. So now we're between box to box. You're kind of just tapping around between these two right now, waiting for one to give up, either the upside or the downside. Just remember, if you're in those, if you're going to trade that long, your rules, again, are the same as entering, the same as exits or partials. You're going to be really rigid with your rules, paying yourself at the mean threshold or paying yourself at the premium level in the 1 minute or the rejection block, so on and so forth. So those things are always rules you have to follow as well, because you get these moments where it just comes back and snaps through and takes out your stop loss, unless your stop loss is sitting down here. Right now, I can't say one way or another where that's going to go. It looks bullish here. It's being held right at a D level bullish here for higher prices. So still bullish, but inside here, you've just gone from premium to discount right back up to premium again. So if that bounces off of here and starts to roll through, then look for a retargeting of this and then heading back for that fair value gap first presentation again. And if you can argue both sides, I just wait down till you can see something cleaner. Wicks do the damage. That's right. The wick on a Mercury was 35 points. So now you're stuck inside this range, and you've bounced off the premium discount area. So we want to see this climb above here to go higher, or close below here to go lower. Preferably this mean threshold. Take out this wick here. If we close below that, then we'll look for a run on this liquidity down here. I'd be looking for a retest of 239. If we can get down here, come back, retest at 239, look for a continuation, and then a run down into this little fair value gap below us. If we can get it back up above this level, look for a continuation for the highs. I took that outside of the macro, didn't follow my own rules, and paid the price. Ooh, interesting. So we're back to this level now. She's gone from premium to discount again. Yeah, Ali, you got to stick with your rules, man. You don't have to follow Hadid's rules or my rules or anybody else's rules. If you've decided that that's your level, that's your level. In your macro, if you're outside of the macro and you don't want to change it, don't trade it, man. Yeah, I could totally buy into what you're saying, totally, because it's I've been there. I think we've all been there. If you don't follow your rules, you get toasted. Here's the midpoint. This is like the equilibrium of this small, tiny little range here. How's it acting inside that?
Done where?
50% here. Just watching for this to close above or this one to close below. I'll walk over there and meet you guys. I'll meet you guys in a little bit. You're going to be at the house, though, right? You got your phone? Let's see what kind of movement we get at 11 o'clock here or this next macro. See how this thing's just compressing here now? Or waiting for a move. See on a 15-minute chart, you see how we've come down and we've just refilled that whole BISI on a 15-minute chart. And now we're coming back into it again. So this wick is all you'd be interested in seeing get returned to and then go higher. You'd want to see that start to really leave here and not just start to dig back down into this, reclaiming this BISI again and again and again. To me, that just doesn't provide strength. So the 5-minute, you want to see that 5-minute give way and continue coming lower, or that 5-minute get some support and just take off. So you've come down here. That was a nice candle. Now you just want to see it come back. Maybe tap that on a wick and just leave. But see how we're just kind of hanging around in here now? Right off that mean threshold. So it's like this candle here is battling with this candle here. This mean threshold and that mean threshold are just kind of having a battle. Who's going to give way, which is the same as this level and that level. And this one here is just, you want to see something get leaving from here. So 11 o'clock, we'll see if this creates this change in direction here, 11. And that may only be for a short time until we see continuation at 12. Sort of below it, above it, below it, above it. It's compressing, compressing, compressing till it says, okay, I got to bust out of here. Higher or lower. They see that roll all the way over here now and start digging into this candle. Does this mean threshold? The consequent encroachment's been hit a bunch of times. This one hasn't been hit too much. We have to get through here first. This doesn't mean say jump on this as a trade, because as we get closer to 11 o'clock, you can see price could just run above this high, create a fair value gap, trade back into it, and there's your 11 o'clock continuation or run down in here, or 11 o'clock reversal. Are you guys getting excited yet? Isn't this the kind of price action that we all kind of aspire to get into? Agreed to the. I agree with you, sir. I do agree. Not only is it an important candle, there's 4 specific arrays inside that candle I'm most interested in. No News Monday blues. I got the No News Monday blues. I think the lion's share of that move was done from pre-market till now. I like this 15-minute hold here. If we can keep this holding. Lines up nicely with the 5-minute, the 1-minute, top of it, discount portion, run up, find support, I want to see this run up, find support right here. 258. Right there. Now you want to see that continue pushing higher now. Oh, don't worry, Hans. I think we'll come back and get that. We could still come back and get your regular trading hour gap today. Right into the rejection block again. Come back and using this level one more time. We went above it, hit rejection block, came below it, find support, come below it. Gotta love a good consolidation. Can you stay on the horse inside a consolidation? Don't follow my rules, blues. Rules, blues. One stage distribution and 930 are always tricky. Very nice. Below it, tap it, come lower, opened on it, come into it, run lower, looking for this level right here now to see if we can give the discount array, run on liquidity down here now. And again, we're looking for another run back to the fair value gap initial presentation and another run into this 5 minute here. So if this had some legs to get out of here, you wouldn't want to see this multiple candles come back and retap this. Same with this here, the 15 minute, this constant bang back and forth. So look at time and price and say to yourself, what do I expect at 10 o'clock, at 11 o'clock, 12 o'clock? Now you could see if this is going to go higher, I'd like to see 12 o'clock to 1 o'clock, make a new high, or 1400 into 1400, then start reversal. So if you don't get 12 o'clock, take out these highs with a wick and then run lower. Then I'd be looking for 1400 at the 1350 macro. See if that gives you your reversal. You have your new macro now at 1050. We'll see how this one sorts itself out. See if this holds right here. I'm gonna give this till 11:10, 11:15, and then I'll call it quits for this morning. I'm gonna go do some moving, and then have a look at this for the afternoon. Same with me, Ollie. You need a big displacement candle out of here now. I'd like to see this set up for cam 3. We have a nice little consolidation, have a nice big price leg, create a fair value gap, run straight through this, come back up to cam 1, 2, cam 3, into that fair value gap, and then take her lower. So it would look something like this. Run higher. Create a little fair value gap here. That kind of idea. So I'd run up, create a little fair value gap here like this, off that one, trade through it, all the way back down, take out these lows, trade all the way back up into 50% of this, and then take it lower around lunchtime. That's what I'd like to see. Five-minute chart still holding, so is the 15. Keep coming higher now. You want to take this out. Let's just use its mean threshold support to come back into this consolidation again. But it's got some liquidity. It's engineered down below us here. It's taking out these highs. Roll over, pair it up with these guys here, then run through and take out the highs. This macro is coming to the conclusion. Another 10 minutes or so. You're still inside this larger range of D. I see what you're looking at here. It did find institutional order flow entry drill. Mean threshold, it hit. Now you're looking for this candle's body to hold price, keep pushing higher. You want to see some support here. Keep coming higher. And support it has given you. Back in sync for looking for this 283 again. Certainly not getting any sudden drive to get anywhere, is it? Now you want to see this break or hold support now. Start pushing higher. I think that's going to be it for me, you guys. Keep an eye on this next 15 minutes or so. And look for 11 o'clock to give you a bit of a turn. If it doesn't, continues to march higher. Look for this to create a, it's 12 o'clock. Look for this to create a CAM Model 3, 1, 2, or 3 level reversal here. You want to see it, obviously run out, take these highs, come back down, nice displacement down, come back into a CAM 1, 2, and 50% of that leg, whatever fair value gap forms in here, for continuation on the downside. If we're going to run back into this range again, we're going to continue marching higher, then just keep looking for the support off those levels. The support's price going higher. Nothing changes, just keep looking for that continuation support. If you don't get it, and you see it, market structure shift to the downside with a change in direction, get on board, and you can take it lower. Well, you got some level of detail this morning. We gave you several different entry points this morning. Again, nothing I'm overly crazy about, but we just certainly gave you calls to make some cash if you would have got in on those this morning. So I hope it kind of helps, and I'm out of here. I'm going to go do some moving and stuff. So thanks for tuning in. I appreciate you guys' time as usual. There's many people out there that you guys can sit with, and I appreciate you guys taking the time with me here today. And thanks for the input, Ollie and Hadi, Russell. Thanks you guys for your input. It's always appreciated. And you can catch those guys on the Telegram channel. You can go to the link in the description above if you want to join our Telegram channel. If you're new to our channel, like, subscribe. It's always appreciated. And we'll see you here tomorrow. I think I'm still here tomorrow. I'll try and get one little quick show in before we leave. And then I'll be back in again on Thursday. Or sorry, Wednesday. So until then, you guys have an awesome week. Have an awesome day. And I'll see you guys tomorrow.